Good afternoon, everyone, and I appreciate you taking the time to attend this call. I'm Sid Rajeev, Head of Research at Fundamental Research, and our guest today is Domenic Carosa, Founder and Chairman of Banxa Holdings. Banxa went public last month, and its shares are up 200% since from its listing price. They offer an internationally compliant solution for customers to conduct fiat to crypto, as well as crypto to fiat transactions. And they offer services to leading crypto exchanges like Binance. So the agenda for today is I'll kick off the call with a brief overview of the significant increase in trading of cryptos in the past few months and our thoughts on Bitcoin prices going forward. Dom will take over from there and introduce us to his company, highlight some upcoming catalysts and things we can watch out for. For listeners, you can either wait till the end to ask questions, or if you have questions during the presentation, feel free to type them in and we'll try to respond to them. We encourage questions to be directed to Banxa since we have Dom on the call today. Here are some key disclaimers. Please take a moment. Okay, so let's get started. Bitcoin is currently trading at record highs and is at $48,000 US. Bitcoin was easily one of the best performers last year as prices moved up 370% versus S&P 16%, and gold also moved up 16% last year. This chart here shows Bitcoin's performance in 2020 relative to gold, silver, and global equity indices. As mentioned earlier, Bitcoin was a clear winner. Despite the surge in prices, cryptos still account for a small percent of mainstream asset classes. Cryptos are shown in dark blue bar on the right bottom here. Cryptos account for 1 trillion, or cryptos has a market cap of $1 trillion, while gold is at 13 trillion. Global equities are at 90 trillion, and real estate is much larger at 280 trillion. So you can see how cryptos compares to other key asset classes. Now, among cryptos, Bitcoin is by far the largest with the market cap of close to 900 billion, followed by Ethereum at 200 billion. Now, I wanted to show this chart as it shows the history of cryptos since Bitcoin started in 2009. The key takeaway here is that a number of brand name houses, majors, have started exposing themselves to cryptos in the past few years, including Facebook, China Central Bank, Fidelity, the CME Group, to name a few. Now, the total assets under management across digital assets is estimated to double in the next 5 years, and that's our estimate. And we believe demand for cryptos will be driven by three factors. Number one, fast execution of international transactions. Number two, the ability to bypass fees associated with conventional banking system. And the third one is its long-term potential to be a capital preservation asset. Now, although cryptos are currently far from being safe haven assets or capital preservation assets, we believe they have the potential to be perceived as safe haven assets over the long term and capture a percentage of the global investment demand for gold. A key similarity between gold and Bitcoin is that both have limited supply. Now let's see how we can forecast Bitcoin prices if it were to capture a percent of global demand or gold's demand. We estimate that the total value of gold stocks out there is approximately $9 trillion. And this is based on our long-term gold price forecast of $1,400 an ounce. A 5% market share of gold implies Bitcoin prices should be $21,000. At today's prices, we estimate that Bitcoin is at 11% of the gold market. And with time, if Bitcoin captures 25% of the gold market, Bitcoin could be over $100,000. And with that, I would like to welcome Dom, Chairman of Banxa. Dom, you'll be able to share your screen as of now.
Fantastic. Thank you, Thank you, Sid. Just to continue on, g'day everyone. My name's Domenic Carosa. I'm the founder and chairman of Banxa. What I'd like to do is just to firstly follow on from Sid's theme in regards to some of the key thematics in the space. And then I'll spend the next couple of minutes giving you a bit of an insight into how Banxa is part of this new ecosystem. First and foremost, I think one of the key things that we've seen over the last few years is that, Bitcoin and crypto, and I use those interchangeably, has really moved from the domain of the tech nerds, and yes, I'll put up my hand and say I'm one of those, to really being the sort of a main push with regards to high net worth investors, family offices, and we've seen an increasing number of institutions move into this sector. And I'm sure everyone's heard about Tesla buying Bitcoin as part of their treasury function. Paul Tudor-Jones, as some of you know, is considered the father of the modern day hedge fund, and he came out a number of months ago and said he's now investing in Bitcoin. So it kind of really reaffirms all the key thematics that Sid was talking about. Banxa, the best way, if I had, let's call it 2 seconds of your time going up an elevator, the best way to describe Banxa is we are the PayPal or Stripe of the crypto industry, of the digital asset industry. And our mission is to build the bridges between the traditional financial systems, the fiat world, the US dollar, the Canadian dollar, the euro, and the digital asset space. And we call that the fiat on-ramps and the fiat off-ramps. So we are effectively an infrastructure provider for the industry, the picks and shovels, as you may. And the way the business works is that we consolidate and aggregate many payment methods, including MasterCard and Visa and Apple Pay. And for those of you in Canada, Interact. For those in Europe, SEPA. We wrap that with a layer of regulation, the regulation layer, the AML, KYC, the multiple licenses that we have around the world, combined with our proprietary risk management platform. And then we effectively then deliver that coin to our customers and to our customer's customer. So our business model is a B to B to C model. So we effectively wrap up our offering into what is called an API, which is geek talk for a connection between our payment infrastructure and our customers like Binance, OKex and Huobi. And we have a very, very strong pipeline of customers that we're currently onboarding. The way that we make money today is by effectively clipping the ticket. And that's the business model today. Moving forward, we will be looking to add other services such as interest-bearing accounts, borrowing and lending on top of our payment infrastructure. The key metric that we utilize in order to communicate how the business is performing is what we call TTV, total transaction value. These are actual numbers. And as you can see, in the December quarter, we had well over 100 million of TTV, which was 400% growth year on year. As we announced only a couple of weeks ago, if you take our January numbers and annualize, or not annualize, but add them with regards to this particular quarter, we would be doing well in excess of 150 million for the March quarter, which is what we're currently in. We listed early January at $1. I believe the last time I checked, we're trading at about $3, which gives us a market cap of about 120 million. I've listed some of the comparables, companies like Voyager, Mogo, and Galaxy, and I guess this gives you a sense of we're really only got a fraction of their respective valuations, and that's partly attributed to the fact that companies don't really, people and investors don't really know us, given that we only listed early January. In terms of the shareholder base, I think that's obviously an important part of the mix. Board and management is very aligned with 27% of the company. The next 3 investors on our register are all institutional funds based out of Singapore and Australia: Allium, NGC, and Thorney. And you'll also notice we have OKex Exchange and KuCoin Exchange, which are 2 of our customers that are also on our register. In terms of the board, as I mentioned, I'm the founder and chair of the company. The next 3 non-execs are Matthew Kane, Dorong Cohen, and Jim Landau, who collectively between the 3 of them have over 50 years of technology and business experience. And led by our CEO, Holger Arians, who's a German national. And as I like to say, he runs the company with German precision. And then followed up with Constantine, who's our CFO in Canada, ex-EY, Josh, our GM, ex-EY, and Ian Clark, our CTO, ex-Goldman Sachs. So that really concludes the formal presentation. And if I can just maybe leave you with one final comment. If you believe the thematic that Bitcoin, Ethereum, and this entire ecosystem is only going to get larger and larger over the next 3, 4, 5, 10 years, then in my view, Banxa is very well positioned to take advantage of the growth that's happening in the market. And whether the prices of the coins are going up or down, Banxa clips the ticket. And that's one of the reasons that I really love our business model. Without further ado, I'll hand over back to Sid. And if there are any questions, feel free to ask them via the chat.
Okay, thank you so much, Dom. We can now open the call to a Q&A. Listeners, if you have any questions, please feel free to type them in, or you can click on the raise hand option and I can unmute you. So Dom, we have received a few questions already. Maybe the first question really is based on what you ended your presentation at. Does Bitcoin prices have to keep rising for Banxa's growth? So yeah, Dom, please go ahead.
Yes, thank you. Thanks, Sid. So maybe one of the ways to sort of explain that, coming back to this slide, Banxa's model is we call it the fiat on-ramps and the fiat off-ramps. And so whenever someone effectively think of it as a highway, and as people drive onto our highway, we clip the ticket. As they drive off the highway, we clip the ticket. And so, in fact, for us, volatility actually helps us generate more income. And so in that respect, my view is, and as we know, there is a certain degree, or in some cases, a high degree of volatility within the digital asset system, because it's partly still quite immature. And hence, we are not reliant on the price of Bitcoin or Ethereum. And I should have also noted that we offer almost a dozen coins: Bitcoin, Ethereum, stable coins like USDT. And if there's a new coin that comes out that then becomes popular, in the top 10 or the top 20, we have an ability to then integrate that onto our platform.
Okay. The next question is, can you talk a little bit about your technical team, as in how was your tech developed?
Yeah, good question. Our technology, and maybe this is maybe a good slide, was developed in-house. It is our own proprietary technology that we have been building since 2014. And that's one of the things I should have mentioned. We've been in the space, and just by way of background, I've personally been involved in technology since mid-90s, listed my first company on the Australian Stock Exchange in 2000, and then ran a small early stage VC fund. Got interested in Bitcoin and crypto in 2013, was reading all the white papers, and the way that I learn is by doing. So I bought some mining equipment, bought some Bitcoin, and basically learned about the ecosystem. And a few months after that, launched a website that's owned by Banxa called bitcoin.com.au. So we've really cut our teeth within regards to this ecosystem. This is really year 7, 8 of existence, and so we've got deep learning within the company from an operational perspective, as well as from a quite a mature technology perspective as well.
Okay. Is all the infrastructure in place, or do you have more investments to be made? I think the question is asking, basically wants to know if there's more CapEx, or do you have everything in place to ramp up operations?
Really, there's not a lot of CapEx involved in this business. As we add more people, we're going to buy them laptops. That's really the extent of our CapEx. Everything we do is in the cloud. This, if you ask me, what are some of the reasons why I really love this business? It has a very high degree of what I call leverage. And if you just look at this particular slide, which is our TTV, our total transaction value for December 2020, it was 111 million. Now, whether we're doing 111 million or we're doing 1.1 billion a quarter, we don't need to add that much extra from a resource perspective. We add more AWS hosting, we add more customer service people, but that's basically the extent. And that's the beauty of the model. It is highly, highly scalable. And we've made significant investments over the last few years to get us to this point. And really now it's about continuing to add. And just to give you some context, we've got almost 50 customers. There are a few thousand exchanges, wallets, and websites out there. The ones that matter to us, there's about 500. And so we're really only in the early stages of bringing on board new customers. And we have a very, very strong pipeline as well.
Okay. The next question is related to your products. What are some of the future products and services Banxa hopes to offer, and what's the timeline?
Yes. Today, the business model is clipping the ticket, both a combination of comms and spread, and that is basically on the payment. And I call that, we call that's layer one. The payment infrastructure is let's call it the base infrastructure. And then over time, and I'm talking over the next 12 to 24 months, being able to add other products and services that you would typically get at a financial institution. For example, interest-bearing accounts, where you can put your crypto with us and you earn effectively a yield, like a term deposit that you'll get at a bank, or an ability to borrow or lend against your crypto. And so what we call this the layer 2 services. And for us, utilizing the McKinsey Horizon model, Horizon 1 today is build out the payment infrastructure. Our Horizon 2 is adding new products that sit on top of the payment infrastructure. And as you know, from a consumer perspective and from a business perspective, as soon as you start offering more than 2 services to a customer, the reduction of churn is quite significant because effectively they're locked in. And so the strategy over time is to continue going out there and adding more customers through our API and our widget. And then as part of that, adding more than just payments, effectively the layer 2 services over the top.
Okay. Next one. Banks pay interest because they lend money out and charge interest to borrowers. How is Banxa going to pay interest? It is going to lend out crypto as well?
What's likely here, there are already a number of companies that we're talking to in the space. and it's likely that we will just end up doing a deal with a number of different groups who can effectively provide us what we call a white label service that sits over the top of our infrastructure. And that then gets back to the fact that we don't need to spend millions of dollars in effectively building out new product. We can just effectively add new products on top of our payment infrastructure. And this is why, why the payment infrastructure is so very, very important. Think of it as it's like your internet connection at your house. It's basically, it's there to then give you access to all the other services over the top. And that's why our Horizon One focus is about laying down the payment infrastructure, because once we've done that, that's extremely powerful in the sense of we can then start adding products. And I've mentioned a couple of products. They're the products that I know about, that we know about. Give it another 2 or 3 years, and with the advent of DeFi and the evolution of this ecosystem, there'll be products that we haven't even thought of that we'll be able to lay down as layer 2 services on top of our payment infrastructure.
Okay. The next one is, how has the introduction of additional KYC and AML affected your business? And also they want to know about your partners' businesses, exchanges.
That's a really good question. Just to provide you some context, in 2014, when we got involved in the space, it was very much the Wild West. We and I strongly believe that regulation is good for the industry. And it's only as more regulation that has come in to this industry that the market has matured and grown. And in fact, Banxa was involved in one of the early associations in Australia that lobbied the government for regulation. And in fact, Australia was the second country in the world behind Japan to actually issue licenses and registrations for crypto companies. And obviously Banxa was one of the first. So we have basically cut our teeth on running a regulated payments platform. It's part of our DNA. And so we actually haven't seen any issues. In fact, we've seen a growth in our market. My view, regulation that is fit for purpose is good for the industry, it's good for the players like us, and it's ultimately good for the customers.
Okay, that's very useful. Next one is more tax related. What are the regulators saying in regards to taxes? How will converting cryptos to fiat be handled as a tax event?
First and foremost, people need to seek their own financial advice. I'm not really qualified to give you tax advice because it's different in each country. And I know in some of the countries, some of the Western countries like Australia, when you sell your crypto and you make a capital gain, obviously at that point you need to declare it. We're just the payment infrastructure provider or like the broker, and really it's up to each individual consumer out there in the wider ecosystem to just deal with their own taxes according to the rules and regulations in their country.
Okay. Next question is more regarding your guidance. Do you give out guidance for TTV for year end?
We haven't provided guidance at this particular point. I believe that fundamental research was looking to release a research note, and I'm not sure whether or not there will be any guidance in there. We only just listed. I think the best thing to do, if you want to look forward, the best thing to do is just look in the rear view mirror and see what we've been able to achieve. We released a January update a number of weeks ago on a PCP, January 2021 versus January 2020. We were up 1,000%. In terms of the last 12 months, we are up 400%. And if you extrapolate out what we announced a couple of weeks ago, our TTV will be in excess of 150 million. If you extrapolate that number for the March quarter, and in December we did 111. So I'm really not at liberty to provide any forecasts, but all I will say is have a look at the past and then use your own judgment to predict the future.
Yeah. Now, so with regard to fundamental research, our reports, yes. So we put out an introductory note on Banxa last month. We are working on an initiating report on the company, which is going to be out shortly. And that will have our projections and fair value estimate on Banxa. Okay, so the next question is, could you please highlight your key catalysts for this year or milestones?
Certainly. I think there will be a number of them. Other than TTV, which is an obvious one, which is effectively this particular slide here, we will continually be adding new customers, and those that we believe will be material, we will announce via a news release. The others we will just communicate via our Twitter and our LinkedIn accounts. Next will be continuing to add new payment methods as we continue growing the company. And the reason why that's important, for example, and we haven't done this yet, but if we want to add Thai baht, Indonesian rupiah, South African rand, just to give you some examples, we can add those payment methods into our platform, and then we literally flick the switch and make those new payment methods available to our customers. So then our customers can then go and attract customers in Thailand, Indonesia, South Africa, and the list goes on. And that's really getting to the essence and the leverage in the model. So really, in summary, we do have a strong pipeline of let's call it initiatives that we will be announcing in due course. What we've also mentioned previously in a number of announcements is that we are looking at an OTC QX listing, as well as a listing in Frankfurt as well, which will obviously cater for our US and our European investor base.
Okay, Dom, so two more questions. What do you think is the impact of MasterCard and PayPal getting into this business?
My first reaction is bring it on. Anything in this ecosystem that adds further credibility, further access and visibility to customers is great. And what it basically means by MasterCard and Visa, and some of you may recall a number of years ago, MasterCard and Visa, there were not just talks, they were blocking customers from making digital asset or Bitcoin transactions. And really in the last month or two, we've seen big groups finally start dipping their toe in the water. And I think that is great for the ecosystem. It opens up, less than 1% of people around the world actually have access to, have bought and have touched Bitcoin or the other coins. We are so early in this ecosystem that, in my view, there's a long way to grow. And I'm sure one of the questions will be, what does the future hold? Moving forward, given that this is still fairly new industry, and if you want to, for those of you that have got enough grey hair that can remember the internet days, this is very much like 1995, 1996. We are actually that early. And what I predict over the next 3, 4, 5 years is there will start being consolidation in the marketplace. And if you were to look at a company like Banxa, a payment service provider, providing services to the crypto space, there are really two natural groups, if I want to put them into buckets. They would be what I call crypto natives, those companies or groups like an exchange that wants to add a myriad of new payments to their infrastructure. That's very much one group. And then the other bucket would be the more traditional financial groups, the traditional banks, the traditional PSPs in the space that want to get involved or exposure to the digital asset space. And as you know, a lot of these big groups, the way they're going to do this is through an M&A strategy. And I believe that Banxa will be very well positioned at that point. But for now, we have enough on our plate. We've really just scratched the surface with regards to the business, and we are, very much focused on continuing to grow in a sustainable way, and ultimately providing a really good customer experience.
Okay, just one final question. Could you please talk about your balance sheet, cash position, and do you have to go to the market to do some financing?
So we will have our Q2 results coming out at the end of February. It would be remiss of us to talk about what the balance sheet will look like at that point. So I can't say too much. But in terms of your other point, no, there are no immediate plans to raise any capital. We're comfortable with the capital, with the balance sheet as it is. So that's all I can say at this point.
Okay, so I don't see any more questions. Thank you so much, Dom, for taking your time and providing us more insights on what you're up to. And thank you so much, everyone, for taking time today. A recording of this will be uploaded on our channel shortly. As mentioned earlier, if you wish to see our introductory report on Banxa, and to watch out for our initiating report that will be coming out soon, please sign up and be a member of research, frc.com. Again, don't forget to take advantage of our today's offer. The link to that deal is provided in the chat section here. Thanks again, and wish you all the best and stay safe.
Thank you, everyone.